Hey everyone, welcome back to Upside Down Data. Today I want to talk about how things have been quiet, a little bit too quiet for Bitcoin, and why we might expect that to change in the not too distant future. If you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter, put a lot of updates, better indicators, and more over there. So if you've been following Bitcoin over the past month and several months, not a whole lot has been happening. It might feel like a lot's been happening, but really price has not moved very far at all, especially in this most recent time. So kind of in from this big leg down that we got in June, price has more or less been trapped between the around 25K level and then down to, roughly around, let me draw that a little more cleanly here, roughly around kind of the low 18Ks with, the one exception being this wick all the way down to 17.5K at what is currently the local bottom back in June. But then even more recently, it's been even more truncated, and we've really just been finding a top basically every time we get there at around 20K, maybe a little bit above 20K. And so when this happens, volatility has shrunk. Volatility is squeezing. And this has gotten a lot of people, and I personally agree, saying that this probably isn't going to be able to keep up for much longer, right? This squeeze of volatility, this diminishing of volatility is likely to break one way or the other in a big way in the not too distant future. And so, that's all well and good to say, but let's talk about some data we can look at that actually can help us quantify just how low volatility has gotten, just how squeezed volatility has gotten, and then why we then might believe that that should lead to a big move. So I made a video about this recently where I talked about the CPI potentially being the catalyst to break us out back here. Didn't happen. One of the indicators I talked about in that video, though, that I think is useful to keep an eye on here is the Bollinger Band. So the way this indicator works is it puts a moving average through the price, and then it calculates standard deviations above and below. So usually the lines above and below are two standard deviations. So two standard deviations above, two standard deviations below. And so, some people look at this to say, oh, if you go and you touch the top or you touch the bottom, that's likely a local top or bottom. I personally like to look at this indicator more in terms of what it tells us about volatility, because you'll notice when price is moving really rapidly, in these big breakouts like we saw here, the width between the top and the bottom Bollinger Band gets large, it gets big, whereas when you're kind of stuck in a range and volatility is consolidating, is decreasing, you actually end up then getting these Bollinger Bands that are closer together, that are more narrow. And so we can actually just go ahead and look at that directly if I just pull up the Bollinger Band width oscillator. And so what this is basically doing is just telling you, how much space is there between the top Bollinger Band and the bottom Bollinger Band, down here. And so what we can see is that we're down at a really low level. In fact, the level that we're at right now, 0.07, is really the lowest that we've seen in a very long time. All these other points where we've gotten into low, squeezed Bollinger Band points. This is 0.09 back before this big move down that we saw here in August. This back here is 0.1, which kind of then, more or less 0.12 before this big move down to the downside here. If we scroll back down a little bit more before this big move down, we're down at about 0.1. And so really we're seeing a contraction of volatility. Here's about 0.12 before this big move up in the summer. We're seeing a pretty extreme contraction of volatility that when you just go back and look at history, I'm just continuing to scroll back, you can see, back here 0.04 is even more squeezed. Got this big run up from about 9K all the way up to, around 12K back here in the summer of 2020. So on and so forth. You can keep going back and you can look at this, and you can obviously pull this up for yourself and look. But you'll see that when you get these really low Bollinger Band readings, it tends to precede these big moves to the upside. So the fact that we're seeing a similar behavior now is suggesting that some kind of move, and this is agnostic to direction. So in the past, I was showing you times where oftentimes price moved up, but like back in some of these cases here, price moved down. It's a breakout in one direction or the other. That's what this is signaling, that this volatility, as it gets more and more crunched, just makes it more and more likely that a big move is coming. And then, you'd have to use other data to make your predictions of which way it'll break, but a break in one direction or the other seems likely when you see these spikes, or excuse me, these dips, these really deep dips in, for example, the Bollinger Band volatility. So that's one indicator we can look at. I actually, just for fun, put together my own kind of indicator of what I'm calling here volatility buildup. That's probably maybe not the best name for it, but essentially what this indicator is trying to get at is this idea that when we've been caught in some kind of a range, when Bitcoin's been like it is right now, we're caught in this range that things are really consolidating, getting really kind of tight together, but then there's still a lot of kind of action in the price action within that range, right? There's still movement happening, but there's no actual breakout. And that's what I'm calling this kind of volatility buildup, where there's still, some interest, there's still transactions that are happening. Sellers are getting exhausted, buyers might be getting exhausted, which then might lead you into those scenarios where a big breakout is likely. Because really, if we just want to think theoretically about why we should expect big breakouts when you get to these really constricted volatility spaces, it kind of makes sense when you think about it, right? At any given price point, there's so many buyers and sellers. There's so much, so many Bitcoin that are being looked to be sold, and so much money that's being looked to be put into Bitcoin at those price levels. And then over time, basically the sellers are going to have sold what they want, buyers are going to have bought what they want. So if there's not a new influx of buyers and sellers that are equal to each other, eventually you're going to get to a point where you get a very thin order book, where there just aren't that many people putting in limit sell orders or that many people putting in limit buy orders. So then when something changes, either you get a flood of new buyers or a flood of new sellers, or some event happens, like, for example, the CPI print, which I thought might have been this catalyst, then that can change the dynamics. That can tip the balance in one direction or the others, where suddenly you get a bunch of sellers or a bunch of buyers coming in. There's just not a lot of liquidity in the order books. So then the demand, pushes price either up if it's a lot of demand coming in, or pushes price down really far as it clears out the order book to the downside, and you get a big move as a result. So then, of course, a big move tends to attract trend chasers who will either buy in or dump as well when you start falling off in a quick way, and that can catalyze those big moves. So there's multiple different reasons why these crunches in volatility often can then lead to big moves in one direction or the other. That's just kind of one of the ways that this can play out. So that's what this indicator is trying to get at, is trying to get at this idea that, price has been consolidated into a very constricted range, but a lot of activities happened. Price has been moved around, people have been buying and selling. Basically you're looking at that exhaustion of the people who are looking to buy and sell happening. And the longer that happens, right, the longer you're stuck in a little range with that kind of activity going on in the background, what this indicator will try to do is move to the upside. So really what this indicator is capturing is being in a tight area with a lot of activity happening, suggesting that you might be getting closer and closer to that exhaustion point where, liquidity is getting thinned out, order books are getting thinner, etc., that might catalyze a big move. And you can see that with this indicator, oftentimes when it spikes up, so this indicator is agnostic to direction. So when you see a spike up, it could mean either a big move to the upside or downside is likely to come soon. When you see this happening, oftentimes big moves have followed. So you see, for example, here, this massive spike up in the indicator, and then sure enough, soon after, vroom, price shoots to the upside. A spike up, vroom, price moves up. Spike, price breaks out. Spike, price breaks down. Spike, price breaks down. So basically this idea that when you get stuck in a range, when you start seeing this indicator spike, that might mean that the breakout is coming soon. Because generally speaking, when this happens, in the not too distant future, you start seeing those breakouts happen. Same here in 2018, when we found the bottom, then we went and we broke out to the upside, got this big spike leading into that big move up. Saw this back over here as well, this big spike before this big leg down and then this leg down here. And interestingly, we just saw that spike again. And so this is some confluence with what we're just talking about with the Bollinger Bands, right? That, Bitcoin has been in this very constricted area for so long. This indicator also thinks that things are kind of coming to a boil a little bit. Now you'll notice that this has been rolling over, right, and falling back down. So, you might say, oh, well, that just means it's a fake signal. Well, maybe, but maybe not, right? You can look at this one. It was actually after the indicator rolled over when you actually see that move up. And that actually tends to happen in other situations as well. You'll see it spike, and then once it's rolling over, that's when the move actually starts happening. Spike, roll over, then the move really follows. And so I'm not seeing this as necessarily being an invalidation. I'm just seeing it more as confluence with what the Bollinger Bands are also telling us. This is a point where there might be what you could think of as kind of this buildup where there's not a lot of volatility happening, but the conditions for big volatility coming are getting satisfied. And so a big move from here would be very plausible. So I wanted to show this with some other assets as well, to just show it beyond just Bitcoin, so we can just see how it behaves other places as well. So this is Ethereum with just this indicator put over top of it. And so you can see a similar kind of behavior, right? You see these spikes tend to happen before big moves either to the upside or to the downside. Big spike, big move up, big spike, move down, big spike, move down, etc. Now, Ethereum's a little bit different than Bitcoin, right? Because Ethereum, except for kind of more recently here, had seen a lot of volatility here, right? And so, Ethereum might still be kind of trying to find that point, which Bitcoin's in right now, where there's kind of equilibrium between buyers and sellers. And, holding that price range is just kind of at the general level where about, roughly equal numbers of people or equal amount of liquidity is kind of on the sell and buy side. But Ethereum has been so much more volatile that it's possible that the market's still trying to kind of find that spot. So we did see a somewhat of a spike up here, but not as pronounced as what we had seen with Bitcoin. And just to show another asset as well, this is Chainlink over time, which Chainlink has actually been a quite volatile asset in its history. But again, you see these big spike ups before oftentimes big price movements. Not every single time, right? And you might say, okay, well, does that mean that the model is failing because you're not getting this spike before every single move to the upside or downside? Well, no, because you have to remember what this model is trying to get at, right? It's trying to identify points in the market like right now where you're getting this really constricting of price movement, but with a lot of activity that might suggest that we're getting near those conditions where a big breakout is plausible. And so, for example, at this point with Bitcoin, you see this big spike before it moves down. But then, it's not going to show that behavior when price is just kind of steadily moving up because we're not in those environments, right? We're not in this sideways action. We're in, a bull market, or we're in a pretty distinct bear market where price is just moving down in a pretty orderly way. And we're not seeing this kind of point where a building up into a really big move like this or like this is as likely. So I just wanted to show this because it's something I just threw together recently that I thought was just kind of interesting to see how it behaves here. I think it does a reasonable job of capturing these dynamics, right? When you're in a tight range, but there's been a lot of activity, which might suggest that you're starting to clear out some of the liquidity, get to thinner order books, things like that might catalyze those bigger moves. And especially now with crypto, where we're in the world of margin trading or in the world of derivatives trading, where people are using things like Bitcoin as collateral, where you can get those liquidation cascades either on the long or short side that can really move price up or down quite violently. So really what I kind of want to leave off kind of with this video is just to kind of call attention to this, right? This fact that what we're seeing right now is pretty notable, both from the Bollinger Band and how constricted it's showing it. Also, just that indicator that I threw together that's trying to capture kind of a similar dynamic, it just calculated quite a bit differently from how the Bollinger Band is calculated. But all signs point to the market maybe being a little bit too quiet, right? And it's maybe getting to a point where we're going to see some big violent breakout. And then I think what we really need to start thinking about then is, if that breakout comes, which side do we think it's going to be, right? Do we think it's going to go to the downside or to the upside? I think a lot of people out there, an awful lot of people out there, especially on crypto Twitter, expect that move to bring us down into kind of this 12 to 13K range. And so if that were to happen, that would be a move down of around 30% or more from current prices should we see that kind of activity. And that certainly could happen, right? I think there's, with the macro environment being so as bearish as it is, plenty of reason to expect that kind of a thing could play out. And so that's just something that we have to keep an eye on. But it's also possible that it could get a break to the upside. And one of the things that I'm going to be looking for is what's a catalyst that could come along that could push it that way or the other, right? I think it's pretty easy to come up with bearish catalysts right now. If the stock market just continues to fall off a cliff, if there's some chaos in the US bond market or some other bond markets or something like that, or just a lot of kind of financial instability that shows up, or more recession kind of worries start popping up, a lot of things could happen. If the Fed is suddenly even more hawkish than people expect, a lot of those things could push price down. But then we should also keep an eye out for those bullish catalysts, right? Because those are actually probably the things that would catch people the most off guard. I think most people are planning and hoping for, in some ways, a move down. They probably position themselves for a move down, either to try to buy lower or even shorting Bitcoin. I think fewer people are likely probably positioning to the upside. And so I think keeping an eye out for what those bullish signs could be would be interesting. So certainly if we start seeing a lot of strength in the stock market, for example, that could be one of the things. One of the things that's happening recently is that earnings have been stronger than expected. A lot of companies have reported better than expected earnings. And that might suggest that the equities market is not in quite as tenuous a spot as everyone thought it was. And so if we do see a melt up in the stock market, for example, or at least a pretty pronounced bear market rally, that could be something that could break Bitcoin out of the upside. It wouldn't mean that we're going to all-time high. It could just be a bear market rally, but it might actually be a pretty violent move to the upside. So those are just some things to keep an eye on. And so obviously not financial advice, should make your own decisions of what to watch, what you think is important. But I just wanted to make this video because when you see this, when the market gets kind of this boring in a sense, it usually doesn't stay this boring for long. And so, the more boring the market is, sometimes the more useful it is to pay attention. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. A lot of updates, better indicators, and more over there.